You're listening to Business Stories with Ryan Arcaracci, where I speak to business professionals from all walks of life. Thanks for listening, and let's get to it. Good day, it's Business Stories with Ryan Arcaracci, and I am excited to bring on my newest guest, Michael Reeder.
How you doing, Ryan? How you doing, everyone? Great to be here.
Yeah, good to have you. SRA is your business, Michael, and you are a CPA. I am nowhere near.
Unfortunately, yes.
And I am nowhere near an expert in this stuff. So I'm glad I'm talking to you because I hope to learn a lot. Talk about your journey into where you are today, working in the franchise industry and franchise law and accounting. Talk about that.
Absolutely. So I'm 35 now. I now own the CPA firm that hired me out of college, SRA. And back in 2014, when I first became a partner, our firm I was tasked with leading the efforts of acquiring two smaller CPA firms.
Mm-hmm.
And so one of the clients that we got in one of those books of business was a franchise consultant. Mm-hmm. So here I am at that time. I'm 27, 28 years old, a new partner in the CPA firm that I now own. And I'm buying and I'm helping buy. I'm helping, with buying another business. And I get this client who is in the business of helping other people buy businesses, specifically in franchising. So I was buying another CPA firm at the time. I wasn't buying a franchise, but there were similarities. There were parallels there because I was just buying a business, and I just got this client who's in the business. He's a self-employed franchise consultant, still our client to this day, great guy, who's in the business of helping people buy businesses. So I thought that specifically in franchise. So I thought that was cool. A buddy of mine was looking to get out of corporate around the same time. So I told him about what this client does. So long story short, my buddy became a franchise consultant with the Franchise Broker Association. Shout out to Sabrina and Chris Wall and all the great people down in Orlando. And so as my buddy started to work with candidates, they would have questions about entity structure and funding, and just like you, Ryan, my buddy is not a CPA,
Yeah.
And so he reached out to his CPA friend, me, and
Right.
Hey, Mike, I got these candidates. They're asking me questions about accounting and tax and entity structure and funding, and you mind, just talking to them, and who knows, maybe you'll get some clients out of it. And so I said, sure. And so I did that. And today, here we are in 2022, Ryan, I'm doing the exact same thing, same process, but it's just, snowballed in the most positive way. Like what I started doing for my buddies' candidates, which is providing complimentary CPA consultation calls to his candidates to answer any questions that they have in the context of accounting, tax, entity structure, funding, financial projections, resale, financial statement due diligence, if it's a resale, items 7, 19, and 21 of the franchise disclosure document, AKA the FDD. Those are the financial related items in the FDD, as it pertains to their prospective franchise investment. And then if they want to work with me in a paid context after the complimentary consultation time, that's always a conversation I can have with them at their convenience. And if not, then it's perfectly fine. So I started doing that with my buddies' clients. And so word got around the FBA. So I've been working in this context with the FBA consultants since 2015, and it's been an absolute blast. I've got some great relationships with FBA consultants. In the more recent years, I'm still doing exactly that, with the FBA as the affiliate CPA of the Franchise Broker Association. But I've also cultivated relationships with consultants that are with all the other consultant networks. I've got relationships with the franchise funding companies. I have a very strong understanding of the Rob C Corp, which is a very common entity structure and funding strategy in this world.
Mhm.
I've got a network of franchisors and franchisor development groups. So I have a nationwide network of, so over the last 7 years, I've cultivated a nationwide network of franchise professionals, right? Whether they're franchise consultants, franchisors, franchisor development groups, and or franchise funding companies. And they refer me their prospective franchisee buyers, and I provide the complimentary the CPA consultation to discuss the subject matters that I listed. And several of them become clients. And to this day, our firm is based SRA CPA firm, physically located in the greater Chicago area, but we're really a virtual CPA firm. I have another residence in Portland, Maine. So as I'm talking to you now, I'm actually in Maine. And even when I'm in Chicago, all of my Chicago clients would rather work remotely ever since COVID.
Mhm.
So just such a blast. Like I found this niche as a CPA in the franchise industry the past 7 years. Been so much fun. I have clients all across the country that are franchise owners. And so my bread and butter is working with the franchisees in this context. But I also, as a result of that, I provide value to franchisors because of the value that I provide to their franchisees in the system. I had one example of that is Colors on Parade. Shout out to Ray and all the great people over at Colors on Parade. I hosted a Zoom with all of their franchisees several months ago to talk about planning for exit strategy. So I provide value to franchisors via my process that involves working with franchisees in this context. But that's what I'm up to, man, in this world. There's never a dull moment. There's never a dull moment. And so it's just love talking to buyers. I'm an entrepreneur as well, advising other entrepreneurs all day, every day.
Yeah.
And so it's so much fun. And I really enjoy it. And it's such a blessing. So I mean, yeah, I actually got another call with a buyer in Georgia after our audio today. So it's yeah, man, it's so much fun.
Yeah, that's great. So talk to us, I mean, from the franchisor perspective and the franchisee perspective, what are some of the biggest, you know, tips or ideas you can give them when they are in this phase of buying a business or buying a franchise? What are some things you think they should really look out for or be aware of that they may not be already?
Yeah. So, I mean, there's lots to unpack. I mean, I know so many franchise consultants, so I am not a franchise consultant, by the way. Let me just put that out there. I am not a franchise consultant. I don't study the brands like a franchise, someone who is, a consultant with the FBA or the FCC or the IFPG, et cetera. Franchise consultants, they study brands. Okay. I don't study brands like a
Yeah.
franchise consultant, but I know a lot of franchise consultants and I talk to them a lot. And so, so I'll really try to stay in my lane here as a CPA and not a
Yeah.
franchise consultant, because I am a CPA and I'm not a franchise consultant.
Right.
And so really, I see a lot of there's not. I see people prematurely getting into a certain entity structure and or certain funding structure with their franchise startup.
Right.
That so when having that entity structure and funding conversation, there are really 3 buckets that clarity needs to get provided on, and they're all attached at the hip, right? So what is the investment level, initial plus first 12 months, for example?
Mm-hmm.
And then what are the assets on the personal financial statement, and what is the household income and expense situation looking like? Because those 3 buckets drive the entity structure conversation and the funding conversation.
Okay.
I may talk to someone that, after weighing all the pros and cons, a Rob C Corp makes the most sense for them. I may talk to someone after weighing all the pros and cons of their 3 buckets, that I mentioned, investment, assets, and income. An SBA loan with an LLC may make the most sense. Sometimes
Right.
a home equity line of credit or a securities backed line of credit, or just using good old fashioned cash. Sometimes not all, like sometimes it makes more sense to just take an early distribution out of a 401k and take the hit. Like a lot of it depends on what type of business is being acquired. Is there going to be a lot of accelerated depreciation from a build out for a brick and mortar retail? And then if they have like a spouse that makes six figures, you can pass that. You're going to have a big tax loss on the business for the first couple of years because of the accelerated depreciation and the fact that they're in ramp up, and so they can pass that through to the individual tax return where that loss can offset their spouse's six-figure W-2. So it's like that type of stuff. So like I see a lot of people. And that's what I dive deep on into these with the buyers on my CPA consultation calls, and no one else out there is diving deep with them like I am at this crucial stage of their journey. And as I tell people, like if you're going to be successful in business, then ultimately you're going to be successful no matter what your entity structure is, no matter what your funding structure, but if it's not the optimal one, you could be leaving several thousand of dollars on the table, year after year. So if you're going to be successful, you're going to be successful no matter what. But, you could really be that much more successful if you do a deep dive on entity structure and funding. And so really that's one thing that I see, that's not like I'm really the only one doing that with buyers, that deep dive. And so I say this in jest, but I'm also serious. Like a lot more buyers should be talking to me before they actually just I'm not a funder, right? Like I'm not a lender, but I'm a great person to go to in terms of okay, how should you go about, funding your business, like loan, equity, retirement funds, et cetera. And then once we put that roadmap out there in the context of entity structure and funding strategy, then go out to the funders, shout out to the funders out there, Benetrend's Guidance, Fran Fund, Tenant, First Financial, great funders and lenders out there, SBA. So I'm not in competition with those companies that I just name dropped. But I'm a great person for the buyers to talk to determine, okay, how should I structure this entity? How should I fund this entity? Then go out to the respective funders. And I always respect the funders, the lenders that my network works with, right? So if I'm working with a franchise consultant who refers me their buyer, and we determine, okay, the best way that this particular buyer should fund their business and go about entity structure is X, Y, or Z, and then I defer to the referring franchise consultant in terms of which Rob's vendor they work with, et cetera. So, but that there needs to be, that's why my process has been snowballing in the most positive way ever since I started this, Ryan, is because of the value that I'm providing. And so that so it's really important. There needs to be more deep dive advice in entity structure and funding. That's what I'm providing. Another thing is forget about franchising, right? This is just more about business in general. People got to take their bookkeeping seriously. Right. Bookkeeping is more than this thing that you got to do and send to your accountant so they can file last year's taxes.
Yeah.
So many small business owners fall into that trap.
Yeah.
I'm sure. Yeah, go ahead.
So let's talk a little bit about that, because I think you're right. I think a lot of people neglect to do it properly. And I think in people's heads, especially in my head, you think, well, I have to do bookkeeping for Uncle Sam, right? I mean, that's the most important thing, but there's so much more to it, right? So what else, what's the other reason, or what are the missing links with bookkeeping that you see out there? And what can you recommend?
Absolutely. The missing links are just the bookkeeping system lacking in optimization and automation. Mm-hmm. Right. So when I work with clients, I always, especially new clients, but all clients really, bookkeeping, the topic of bookkeeping can be broken down into 2 chapters, and don't go to chapter 2 until you read chapter 1, right? Chapter 1, so step 1 of the bookkeeping is let's get the actual bookkeeping system in place. Let's create the infrastructure. Then step 2 is the ongoing bookkeeping, right? So of course my firm can do ongoing bookkeeping, but I'm not in the bookkeeping business. I do that it's an incidental, service in my industry. So for the clients that want my firm to do it, of course I do it. My firm does it. But the value that I provide clients is really in the advisory. And the main compliance service that we're doing is the income tax return. And so I would, I am more of a, like, I am the first one to tell the client, like, hey, like, step one, let's get the bookkeeping set up, right? So one of the first services that my firm always works with clients on is getting the bookkeeping system set up. So we set up and we're big fans of QuickBooks Online, QBO, cloud-based bookkeeping system. There are others out there like Xero and Wave and FreshBooks, and they're all cloud-based. So that's good. I'm a big advocate of QuickBooks Online. I'm sure that QuickBooks Online links with like Client Tether, for example.
Yep.
And so the training, optimization, and setup. Like, that's what goes into like setting up the actual infrastructure of the bookkeeping system. So like, let's schedule a call, let's schedule a Zoom with the client. Let's train them on the fundamentals of the software. I'm using QuickBooks Online, aka QBO, for the sake of this conversation.
Yep.
Let's train the client on the QBO. Let's set up their chart of accounts, and let's optimize the bookkeeping system in the context of automation and technology. What does that mean? That means let's synchronize the bookkeeping system with the business bank account, and let's sync it with the business checking account, and let's sync it with the business payroll processing platform. Because so then that way, whenever you click submit in the, whether you use Gusto or ADP or Paychex, whenever you submit payroll, the payroll automatically imports into the QBO. Whenever all of the transactions running through the bank account running through the credit card account, they automatically populate into the QBO. And it's not just bank account, credit card account, payroll processing platform, right? It could be CRM, right? Client Tether. It could be, and I'll, I know that there's more to Client Tether than just, CRM. And that's, but like, what POS, like any other system, like, if there's a billing system, if there is a POS, like, and QBO talks with all these other programs. So let's optimize the QBO as much as possible. So that's step one, right? And then step two is, who's going to do the ongoing bookkeeping? Is it going to be the CPA firm? Is it going to be the client? Is it going to be the spouse? Is it going to be a virtual assistant? Is it going to be an internal employee? Whoever is doing the day-to-day is one thing, but let's make sure that whoever's doing the day-to-day is operating within a fully optimized, bookkeeping system, right? Because bookkeeping, so what are other things, Mike, that bookkeeping is needed for? Bookkeeping is needed for CFO related conversations, right? Let's have, like, you can't have a profitability and cash flow conversation if the books are not accurate.
Right.
You can't have a tax planning conversation. Right? So it's like, what other things other than filing last year's taxes do I need my books for? Well, like, you need them for Uncle Sam, of course, but that planning conversation, there's really two elements of it. There's the tax planning, and then there's the CFO. And when I say CFO, that's not so much about taxes. That's more about cash flow and profit.
Right.
So any of that planning conversation, whether it's tax planning, profit, cash flow, CFO, if you don't have an accurate, updated set of books, then your financial statements are not accurate.
Right.
And you can't have that planning conversation, so that's why bookkeeping is so gosh darn important.
Yeah. Yeah.
And so, but then I also understand why people don't do it, because they're like, small business owners wear so many hats. They're so busy. They're wearing all these hats of their business, and they have a family. And like, when they get home at the end of the day, they want to eat dinner and relax. And then they have to wake up at 5 a.m. and do it all over again. And so I can definitely see why the bookkeeping gets dragged out until it's like, oh crap, it's tax time. I definitely get it. But for those that get ahead of it, it just benefits them so much.
So that's exactly what you're talking about, is getting ahead of it, right? Because you don't want to be fumbling come April tax time or whatever it is, and going, oh boy, I didn't really keep track of this very well.
Right.
So now I'm losing sleep over this, right? So Michael, any particular stories you have of clients you've worked with who you've really helped with this and just kind of helped optimize their process?
Yeah, absolutely. So, I mean, so many times I have conversations with, like I'll have a conversation with someone that is thinking about going like one direction in terms of entity structure and funding. And then like after they talk to me, we end up going another.
Mm-hmm.
Um, I mean, like there are times when someone's going to go into a C corporation structure, and for like, so when you're a C corporation, nothing flows through to the individual tax return. So if
Mm-hmm.
you have a big loss, then that loss is going to carry forward into C corporation and offset subsequent C corp taxable income.
Mm-hmm.
Um, and so, and the C corp makes sense in a lot of situations, but there are times like, I mean, just recently there was a lady that is investing in a brick and mortar mental health franchise, and she's got a husband that makes six figures, and so she's investing in a business. Like, she was originally coming into it, thinking C corp because that's what someone told her, but like
Mm-hmm.
whoever she was talking to was not a CPA like me.
Right.
And so long story short, she's going to go LLC, and she's going to have like this huge loss these first few years because she's going to be building out 3 locations. So think of all of the accelerated depreciation
Right.
on the furniture and the equipment and the building improvements. And her husband makes like a big 6-figure. I'm not talking like 100,000, like much bigger than that.
Yeah.
And so these losses are going to flow through to her 1040 and like essentially like wipe out his income for like a couple years.
Mm-hmm.
And so they're going to get like a massive amount in federal and state withholding back because it's a flow through entity structure. And so, maybe if she was investing in like a home-based service business where the total investment's like 175,000 and it's really like, 50 or 60K for the franchise fee and the rest is like working capital, maybe in that situation, like the appeal of like this flow through taxation as like an LLC or an S corporation flowing through, like there wouldn't be that big of like, there's not all this build out. So like the loss wouldn't be so big. So like, the loss netting against her husband's W-2 income wouldn't be so big, but that's what everything is case by case, and so, yeah. So like that's just, and like that's just one example of like, and then on the flip side, there like there have been situations where someone is going into it thinking, thinking LLC or S corp, but like like for their unique set of facts and circumstances, like going like for example like the Rob C corp, which is like the self-directed, it's like a 401k rollover that's used to, and the 401k of the retirement of the C corp owns the C corp stock. There have been times when we decided to go that route that they weren't even thinking about that route coming into the conversation, but through the unpacking of those 3 buckets, right? Investment, assets, income,
Mm-hmm.
and they're all attached at the hip. So
Yep.
I mean, I'm that is just really where I'm providing a lot of value. Financial projections. We're helping out clients like after like, one of the paid services that we help clients out with, Ryan, are financial projections. And these financial projections have, played a role in like helping candidates move forward. They've also played a role in like seeing that, like one of the biggest things in this, like, the manager run models in franchising are, it's such a big appeal. It's such a big appeal because people love the idea of like, oh, I can invest in a brand and do nothing.
Mm-hmm.
And the franchisor is going to manage it for me.
Yeah.
That sounds like the dream, right? And so, right. And it could, it is being done out there in a few, like with some brands and some certain industries and stuff like that. But, I think that, like our projection engagements a few times have shown the negative in that. And so, and again, like I'm a CPA, not a franchise consultant, but I think that if someone out there wants to own something passive, like they want to invest money and do nothing,
Mm-hmm.
like they should strongly consider investing in real estate or just like cutting a check to like their financial advisor.
Yeah.
Because franchising is more owner operator and semi-passive.
Yeah.
And semi-passive is not passive. And so a lot of times it's like owner operator for 2 or 3 years, and then you graduate into semi-passive as you build and scale.
Right.
But so like these financial projections on these manager, so like these manager run models, the franchisor is charging a management fee on top of the royalty, on top of the ad spend, on top of the technology fee. So when you run the projections on them, after the royalty, after the ad, after the management fee, there's really nothing left after that, and there's very minimal. And so then they go back to their franchise consultant, they go back to the drawing board, and they find another franchisor. And so, our entity structure and funding strategy, we're providing a lot of value to buyers. Financial projections as a determinant on helping them have the confidence to move forward with the brand, or to call an audible and to go look at other brands with their consultant, because the projections just didn't and when we do projections, we really do we don't just plug some numbers in a template and say here's a projection. Like, we put in the research. We look at the item 19 on the FDD. We look at the item 7, but mainly that item 19. We do internet research, industry specific internet research, geography specific internet research. We really, we do the service justice. And so those projections play a vital role when these buyers are, at this crucial stage of, buying, so I would say, and I know that's the long-winded answer, but that's really where we're providing a lot of value for these buyers when they're going through that buying process. Like, once they're in business, that's a whole other story, right? But while they're going through the process of buying the business, entity structure and funding strategy, and then helping them out with financial projections.
Yeah, that makes a lot of sense. And you just don't think about it when you get into owning a franchise, and you think about, okay, if you're married or if you're not married, how does that affect the entity, and what sort of entity it's going to be, how it's going to affect your finances, especially if your spouse is making 6 figures or something or more than that. How does that affect everything? And I don't think people think about that enough. They think about it when there's a problem with it, or a tax implication, but they don't think about it from the get-go. So, Michael, you're full of knowledge. You have a lot of expertise. So I'm telling everybody out there, if you have any questions in regards to this stuff, reach out to Michael Reeder. He is your guy. How can people find you out there?
So my website, www.swartzreeder.com. That's Swartz Reeder, SWARTZREEDER.com. And there's you can submit your information in the contact us section of the website, and our team will reach out to you ASAP. I've got my business phone, 847-241-5800. You can hit me up on my cell phone, 847-302-3397. You can text me on that number as well. My email address, michaelreeder@swartzreeder.com. On LinkedIn, Michael Ian Reeder. So I'm all over the place. You can find me on the website. You can email me, call me, hit me up on LinkedIn. And I would love to connect with you if you're someone who is looking to buy a franchise, or you're already in business and you have any questions in regards to accounting, tax, entity structure, funding, financial projections, etc. I would love to talk to you.
Great. Well, thank you so much, Michael. If you're out there, you're a consultant or looking to buy a franchise and you have questions, talk to Michael for sure. And thank you so much for being on the show.
Ryan, thank you for having me. It's been a pleasure.
Thanks for listening to today's episode. If you're interested in becoming an episode sponsor, please email me at livingryan@gmail.com. And thank you so much.